Good day traders, Stanley Olo here for Simori Capital, and today we'll be talking about buying and selling currency pairs. Today, instead of talking about what is traded, we'll talk about trading itself. So what is trading within the forex market, alright? Trading is buying and selling, alright? And forex trading is the simultaneous buying of one currency and selling of another. This process is facilitated by a trading broker. Okay, so to recap, in buying and selling currency pairs, we can call it trading. And when you trade, you buy one and sell another currency pair. So an example of a currency pair is the euro against the dollar. In this example, if you're to buy the euro, that means that you're going to simultaneously sell the dollar. Alright? And vice versa. If you're to sell the euro, it means that you're simultaneously going to buy the dollar. Now, what this means is that essentially, in a currency pair, there is a tug of war between one currency and the other. And all this means is that the euro, in this example, is competing with the dollar. And the dollar is competing with the euro. Okay? Now, the price of the euro against the dollar is known as the exchange rate. And if you don't know by now, the exchange rate is just the relative price between one currency and the other. Another fact about the exchange rate is that it fluctuates due to the relative strength of one currency versus the other. For example, if the US dollar was underperforming, that means the euro would do better in comparison. It means that dollar investors will take their money out of the dollar, causing its value to depreciate, and they'll put it into the euro, causing its value to appreciate. Okay, so far we've talked about the act of buying and selling, which is known as trading. And when you trade a currency pair, you buy one and simultaneously sell another, all right? And that means that, number one, it's a simultaneous process, all right? And how can you get that done? You need a broker, so a broker facilitates it. Now, a currency pair is one currency quoted against another. And in this case, we've given the example of the euro against the dollar. Now, this currency pair has a price, and its price is known as the exchange rate, which means it's the relative strength of the euro against the dollar, of the dollar against the euro. Same thing, all right? The next thing that we've said is, because it's a simultaneous process, assuming you're going to buy the euro, you're going to sell the dollar, all right? And if you sell the euro, you're going to buy the dollar. Now, the last point about currency pairs is that there's three categories. The first one is majors, the second one is minors, and the last one is exotics, okay? Another name for minors is crosses. So with that being said, we've covered what a currency pair is, we covered the act of trading, we know that it's facilitated by a broker, and we know that it's a tug of war, meaning that if you buy one currency, you sell another. The last thing we know is that pairs exist in three categories. We have the major, the minor, and the exotic categories, okay? Another name for minor is crosses. So if you ever come across that definition, don't get confused. Next, we're going to talk a little bit more about these currency pair categories. Alright, now when it comes to currency pair categories, the first one we're going to discuss is the majors. So the first characteristic about majors is that they always have the USD written alongside them. The second one is that they represent the most liquid pairs in the market. And the third one is that there's 7 major pairs. There's 8 major currencies, but there's 7 major pairs. Now, these pairs include the following: Okay, so here we have the dollar against the yen, the dollar against the Swiss franc, the dollar against the Canadian, the Australian against the dollar, the New Zealand dollar against the dollar, the British pound against the US dollar, and the euro against the US dollar. So this is all we have to know about majors. The first fact is that they always have the US dollar in them, alright, as you can see. The second fact is that they're the most liquid, and all that means is that they're the most traded. Most hedge funds, most banks, most insurance companies have their positions on these pairs, alright? And the last part is that there's 7, okay? So there's 8 major currencies, but there's 7 major pairs, alright? Always remember that. Next, we're going to briefly discuss the difference between majors, crosses, and exotics, okay? So when it comes to crosses, they do not have the USD in them. Alright? They do not. The second thing about them is that if majors are contained within the crosses, so if you have a currency like the pound, the yen, the euro, or the Swiss franc, and it's pitted against the pound, the yen, the euro, or Swiss franc, then what you get is a minor pair. Alright? An example of this is the pound against the yen. Alright? And as you can see, it follows the first law in the sense that it doesn't have the US dollar in it. So this is a cross currency, and because it has majors within it, it's known as a minor. Alright? The next one is exotic. Now, when it comes to exotic pairs, they are denominated by one major currency and one emerging currency, okay? And all emerging means is that it's not necessarily from a huge economy like the euro is from or the dollar is from, but it's from an upcoming economy. Examples of this are India, China, South Africa, Russia, Indonesia, okay? So let me just indicate them here. Now, the word BRICS is used to determine some of the strongest emerging currencies, okay? And it's just an abbreviation that represents a country per letter, alright? So what that means is that for B, we have Brazil. For R, we have Russia. For the 2 I's, we have India and Indonesia. For the C, we have China. And for the S, we have South Africa, alright? B-R-I-I-C-S, BRICS, alright? So to recap, when we're talking about crosses, the first thing we have to agree is that they do not have the US dollar. US dollar is only found in major currency pairs, okay? The second thing is that if a major is involved that's not the dollar in a cross-currency pair, you find that it's known as a minor. And we've given the example of the pound against the yen, okay? When it comes to exotics, there's 2 points we need to know. The first one is that one major will be involved, always. So you'll always find the pound, the yen, the Swiss franc, the euro, the Australian dollar, whichever it is, provided it's a major currency, alright? And you'll also find one emerging currency, okay? So all an emerging currency means is that it's a lesser economy than the major economies like the European economy, like the dollar economy, like the Australian economy. But it's an economy that's coming up, it's emerging, alright? And we've given some examples here using the abbreviation BRICS. Those are the most promising emerging economies that we currently know, alright? So that's all we need to know when it comes to crosses and exotics and how they compare to majors. So what should you as a trader take away from today's lesson? The first thing is what a currency pair is. And all a currency pair is a pairing where the value of one is relative to the value of another. The other word we give to this definition is a tug of war, which simply means that one currency is competing against another. Alright? The second thing that you should take away from today is what majors are, right? And the first thing we said about majors is that they always involve the USD. The second thing we said is that they're the most frequently traded. And the last thing we said about them is that there are 7 major pairs. Now, don't get it confused for currencies, okay? Because there's 8 major currencies, but there's only 7 major pairs. The last thing we need to take away today is crosses. All crosses are more frequently traded pairs that do not contain the USD. When we think about crosses, just think of them coming in second place of majors, alright? So that's all the time we have for today. Join us next time when we talk about market size and liquidity. That's all for now. I've been Stanley Olo here for Simori Capital. I'll see you in the next one.